Hey, this is Chris doing a screen share to explain the government guarantee scheme that's currently running. And this scheme basically allows you to buy your first home with a 5%, or in some cases even less, deposit without paying lender's mortgage insurance. And I'll explain how that works. So when you buy a home and you want to borrow money from the bank is only willing to risk 80% of that property's value. So in this case, I'm doing a purchase of $650,000 that you're buying. It's your first home and you want to borrow some money to buy it. The bank will only lend you $520,000. Okay, that's all they're willing to lend you based on the property value. They don't want to risk any more than 80% of the property value. Now, why is that? What if you buy the house and then the property market drops and then it's only worth $520,000 next year? Yep, seems unlikely, but what if that happened? And that could happen. It's a possibility. The bank is only willing to risk that much because that's where they think it's highly unlikely that the property market's going to dip that low. So they can always get this back. Okay, they can always get this $520,000 back. But that's not going to suit you because you don't have such a ridiculously huge deposit. So you want to borrow more than $520,000. That means that it's going to be more risk to the bank. Now, normally what would happen in that case is you would say, okay, I want to borrow 95%, and the bank would go, okay, no worries. Let's do lender's mortgage insurance. Okay, and what that means is the bank gets you to pay a insurance premium on their behalf, which protects them in case you default on the loan. So they are still only risking 80%, even though they're going to lend you 95%, which is $617,500, which is 95% of that property value. And the mortgage insurer is taking that risk. So this is risk, okay? So the bank's lending you the money, yeah, but if you default, then the mortgage insurer is the one that is going to lose out. They're going to have to pay the bank, okay? So with the government guarantee, you don't have to pay lender's mortgage insurance because the government is going to provide a guarantee, okay, which is they're going to take the risk. So if you don't pay the loan back and the property market falls down to $520,000 and the bank needs to sell your property and recover their money, yeah, they may lose a little bit, but the government's going to lose the majority. They're going to have to cough up the rest of whatever you owe at the time above that 80% mark. And that's where this scheme is good for you because you are now saving the lender's mortgage insurance premium, which is, which can be like, 10, 15, 20,000, even more, as an insurance premium that gets added onto your loan. The other thing is that when you do add on the mortgage insurance premium, it means that you have to include it obviously in your calculation. So you can only borrow $670,500, but you've also got to account for the lender's mortgage insurance that has to be paid up front. So, really you would only be able to borrow like, maybe 91, 92% of the property value. So that's why this government guarantee is so good, because you can borrow the full 95%. Okay, if you need to, right? Obviously, if you've got a bigger deposit and you don't need to borrow that much, then you wouldn't. But if you only had a 5% deposit, that's all you would need for this government guarantee. Okay, in some cases, it's only a 2% deposit, right? Which means you can borrow more than 95%, but I'll get to that in one moment. So I hope that makes sense. That's why I did this little diagram here, make it a bit more visual, and you can see how the risk is divided up for the bank and the government. And for you, it's just simple. You're borrowing 95% of that property value. Now, the government doesn't have any ownership in your property or anything like that. They're basically just taking the risk that the lender's mortgage insurer would normally take. And and if you buy a property and you pay lender's mortgage insurance, it's the same thing. The insurer doesn't have a stake in your property. They're just taking on the risk for a fee. And the government's taking on a risk not for a fee, but just to help out first home buyers. So if we come over to this page here, you'll see that there's an information page from the Australian government, NHFIC.gov.au. And if you come here, you'll be able to find out more about the different government guarantees they offer. So there's 3 of them. Not all of them are always available, depends on the positions, which are down below, which I'll show you. But basically there's 3. So there's the first home guarantee, the new home guarantee, and the family home guarantee. First home guarantee is for anybody who qualifies as a first home buyer, and it's for any property which is within the limits of value. So obviously you can't go and buy a $2 million property using the scheme. It's got to be a conservative price, which I'll show you how to find that out. Then there's the new home guarantee, again open to any qualified first home buyer, but only for new homes. Okay, and these 2 you can do a 95% loan, just like what I showed you here. Okay, so that's what these 2 are about, except one is for any home, including new, right? And this is obviously the one that gets used up first. Then this one's for only new homes. Then there's this one over here, which is called the family home guarantee. Now this is for single parents who are qualified as single parents and are qualified as first home buyers. They actually get a different deal, which is they can borrow 98%. Okay, so if I do 650,000 times 0.98, it's $637,000. So they only need to come up with a 2% deposit. If that's you, then that's a 2% deposit. Obviously, you still need to qualify for the loan. With all of these government guarantees, it doesn't mean that you don't have to qualify the loan. You still have to qualify for the whole loan you're borrowing. So we have to show that you can make the repayments and do all that sort of stuff. But that's how the family home guarantee works. It's 98%. Okay, but apart from it being 98%, it works exactly the same, right? The government's taking that extra risk, except in the family home guarantee, they're taking a little bit more risk. Now, if we go down, you'll see that there are the 3 descriptions here, which I just explained, and the places available. So like I was saying, the first one, the first home guarantee, this one here, which can be used for anything, it gets 10,000 positions, and so does the new home guarantee, and so does the family home guarantee. So as you can imagine, the first home loan deposit scheme, which is that first home guarantee, this one here, gets used up first. And then, at the time of recording, there's still new home guarantees available, and there's still family home guarantees available, but it just depends on, the time that you're going for this. You just need to contact us and find out, which one has positions at the moment. So, at time of recording, the government has just released some additional positions for the first home loan deposit scheme, and we're just waiting for those to come out. Property price cap. So like I was saying, one thing is you need to be a first home buyer, but the second thing is you need to make sure that the property budget you're looking at, it falls within this guarantee scheme. So you can use this postcode search tool to look up your postcode where you're looking and figure out if that's going to be useful to you. So for example, my postcode here is Miranda 2228, and it says here that there's three figures here, right? So the first home loan deposit scheme, they use that's what that means, first home loan deposit scheme. So that's the first one that we're looking at, the first homeowner's guarantee. The maximum in Miranda that you can buy a house for, obviously any house or unit or whatever, is $700,000, and then you would be able to get this 95% loan on $700,000. If it was the family home guarantee, which is this one up here, the 2% deposit, it's a maximum of $800,000. And again, this is any property, a house, a unit, new, old, doesn't matter. Okay, and then you've got this new home guarantee, this one here, which is only for new homes, and that maximum cap is $950,000. And that can be, obviously it has to be a brand new place. It could be a house, a unit, and you can even use it to buy land and build. So that one is obviously why it's the highest, because you may have to spend more buying land and building a house. I don't know. So that's how the property price caps works. Obviously, check your postcode to see what the figures are in your area, because they do vary. Like for example, let's put Dubbo just to have a look and see how they're all different values now. They're much lower. What else is there? So which scheme can you apply for? Like I just went through, I explained the different schemes. So obviously, if you're not a single parent, you can't apply for that scheme. And if you're, not buying a new home, and then you can't go for the new home one, right? Unless you can. Sorry, if you buy an existing home, then you can't go for the new home guarantee. That's all it's saying. Next is participating lenders. So not all lenders participate in the scheme. So if you go to your bank or lender, whoever it is, and you apply for a pre-approval and you're hoping to get a position, if they don't participate in the scheme, then they're not going to be able to do that for you. And they don't want to lose a sale, so they may not tell you about it. So you just got to be weary of which lenders you're going to, and that's why it's useful to come to me, because obviously I work with a lot of these lenders, and I can put you into the right direction and make sure your application is fitting within their policies and also fitting within the government's requirements. So not only do you need to fit in with the government's requirements, you also need to fit in with the lender's requirements. So that really depends on your specific situation, whether you've got a new job, you're on probation, you're you maybe you have been in a position where your credit file has been tainted or something. I don't know. Whatever your situation is, maybe you've had late repayments on your bills lately, and it shows up in your bank statements. All that stuff gets checked. So that's why it helps to come to someone like me who can figure out which lender is going to consider it within policy. But these are all the lenders. Out of the majors, there's only 2 that do it, and then out of all the other lenders, there's a whole list of them, right? So that's who you need to go through. Now, I hope that all makes sense. If you have any questions about it, just send an email to support@godwinfinance.com.au or give me a call 0290339106, and I'll be happy to help. Thanks for watching.